Back, you're watching India Market Open, and it's a tepid start for the markets, but we're focusing in result season this morning on Thomas Cook India. Pretty good numbers for Q3 for the travel company, and that's really in keeping with the theme that we've been seeing. Stock is down this morning though, but revenues were up 24%. EBITDA has seen a healthy boost at 82.6% year on year, and margins up 270 bips as well. And net profits also up 242%. Madhavan Menon, Executive Chairman and Thomas Cook India, joins us now on the show. Very good morning to you, Mr. Menon. Thank you for speaking with us here at NDTV Profit. Let's first talk about what, in your view, has been boosting up the margins.
Well, it's a combination of a variety of things. One is obviously business returning, and you'll see the two-digit growth numbers that we are seeing for revenue in terms of revenue. Another important factor is the cost re-engineering that we undertook during the pandemic are still holding, and we expect to continue holding on to these benefits, which are actually playing all the way down to the bottom line. A third aspect is the fact that we are witnessing higher input costs, which are also adding to our margins. So my expectation is that this is going to be the new normal, if I can call it that, in terms of the way we look at our profitability, and we will remain where it is at the moment.
Get into that in a bit more detail. When you say this is going to be the new normal, what are you forecasting for the financial year, this financial year at the end of Q4 and going ahead for FY25?
So, when I said the new normal, I essentially meant the fact that the cost benefits that we have accrued, in 2021 and 22, will remain in place as we go forward through this financial year as well as the next financial year. My expectation is that the revenue from operations will increase, because you will appreciate that long-haul travel is still has not fully recovered, both from the corporate side as well as from the leisure side. There are visa problems in the US still. There are some visa issues in Europe. But I think the important factor is that while the top line recovers, we will see continued sustainability both in our costs, in terms of the re-engineered costs, as I mentioned, as well as higher input costs going in terms of the top line. Higher airfares, higher hotel costs, higher package costs.
So those are likely to trend higher. Demand, on the other hand, is also likely to trend higher. I just want to talk a bit about your overseas travel segment, where your EBITDAs have grown robustly at 40% year on year. Is that more of a base effect, Mr. Menon, and do you see that as sustainable?
So you are absolutely right. It is a base effect because the overseas operations took a little longer to come back. But the reality is that they have also got the cost benefits that are flowing into the bottom line. You may not see the same sort of growth going forward in the overseas operations in terms of the top line, in terms of the revenue from operations, but I expect that profitability will sustain because of the cost benefits that we are deriving from our operations.
In terms of demand growing, Mr. Menon, I want to understand whether this new domestic tourism resurgence is something that Thomas Cook can benefit from, and to what extent. Because a lot of what we're seeing in terms of tailwinds for domestic tourism, whether it's spiritual tourism, pilgrimages, etc., may be in the unlisted space, or not really the branded players, a lot of DIY happening there. So I just want to understand how this helps you.
Look, I think you needed to look at it from two aspects. One is the Thomas Cook SOTC side, where we sell packages for domestic holidays. And the other one is Sterling Holidays, which puts up resorts in multiple locations. The reality is domestic tourism has been a focus area for us for several years, and we're now seeing the coming of age. We expect our volumes to grow in this space by focusing on a broader segment. The government themselves have identified 60 locations which they're going to develop. So my expectation is that domestic tourism is going to continue to grow. We are going to be active participants in the growth. Some of it is DIY, I agree, but I think people want to make quick trips. People expect a certain level of an experience, and therefore I think the larger players are going to become part and parcel of this entire space. We have always been a participant, though in a limited fashion, because we focused on a couple of destinations. But the reality is that's grown over the last year, and we expect it to continue to grow.
What is your market share currently in this space, Mr. Menon, and what do you expect it to grow to?
Very, very difficult to articulate because there is no measurement in the truest form. There are very few of us who are public limited companies, and unfortunately, the industry doesn't differentiate between domestic, international. But I can tell you the growth that we are witnessing in domestic tourism from our perspective is in the 20-25% per annum, and we expect that to continue to grow.
Let's talk a bit about the sterling piece of the business. What is the trajectory there and CAPEX plans, if any?
We have gone into an asset-light model over 2 years ago, and we've seen the number of properties that we have grow. Today, as we talk, we've got 48 properties that are operating. We expect to get to 55 properties over the next year, in the current financial year and the beginning of the next financial year. We will continue to add approximately 1 or 2 properties a quarter. So we expect that we will be in the range of about 60 to 65 properties by next year, which is where we want to be. These will all be under the asset-light model, which will allow us to start and operate them very quickly, as compared to building a new resort. That's something that we would prefer to stay away from because it requires a completely different model, which we have tried and not succeeded in doing.
All right. Thank you so much for speaking with us. Madhavan Menon of Thomas Cook, the Executive Chairman, talking about their quarterly numbers and plans ahead. Meanwhile, let's get back to markets and look at what's happening there. Tata Motors on a fantastic run, up about 7.5%, nearly 8% at this point. Even as banks continue to seem fairly weak, at least the private banks, Kotak Mahindra, ICICI, HDFC, not massively beaten down, but not having a great day either. So private banks in pain, so is the bank Nifty. Overall, auto is the big story of the day, as well as pharma. Some pharma counters showing signs of life today, apart from Oro Pharma, of course, but Torrent, Pfizer, Cipla doing pretty well, as is Sun Pharma this morning.
I want to make a point, Tamanna. I am looking at the BSE 500, and the top 17 names has only 2 which are non-PSUs.
Wow.
Everything else is PSU. So UCO Bank is up 16%, NHPC up 12%, SJVN 11%, MMTC 10%. Lest you guys get bored, IOB 8%, NIACL, NLC India, IOC, the list is endless. But, well, we should speak into PSUs, and let's cut across to my colleague Hiral Daria, who is in conversation with one more, which is LIC Housing Finance.
Welcome to NDTV Profit. I'm Hiral Daria. LIC Housing Finance, a company that has reported a strong set of numbers on the profitability end as well. Let's connect with Tribhuwan, Adhikari, MD and CEO at LIC Housing Finance. Good morning and welcome to the show, Mr. Adhikari. Firstly, overall, if you go to see a twofold jump in terms of profitability, net interest margins have improved as well substantially. Firstly, what has led to this improvement, and is this going to be sustainable over the next 4 to 5 quarters?
Yeah, I think we are upbeat. I think we should be in a position to sustain the kind of numbers we have seen in Q3. Yes, what led to these numbers? In a big way, I think if I compare it year on year, yes, we have shown a 144% growth in PBT, 142% growth in profit after tax. Primarily due to the passing on of the rate hikes last year. I believe we are getting the effect of that in the current financial year. hence probably the slightly high numbers in terms of PBT and PAT growths. But I think, yes, these numbers per se, are sustainable, and in the coming years, looking into our improvements in the asset quality we are seeing, yes, maintaining the NIMs will be a challenge in the thing. But anyway, we've done well, I think, in this quarter. Compared quarter to quarter, our cost has just gone up by 4 basis points. So I think I'm upbeat. I think in the coming quarters, coming 3 to 4 quarters, I think you can see HFL doing reasonably well.
Right, so that's with regards to where the quarter goes. Now, you mentioned about the impact of the rate, the way the RBI rates are. Now, Budget 2024 has actually raised the possibility of RBI going ahead and cutting rates by almost 50 basis points this year, and that's what foreign brokerage houses as well as banks are indicating. Then, what is the kind of impact you are looking at?
Well, yes, yeah. What has happened in the budget with the government going in for fiscal prudence and other things, yes, the hopes of a budget rate cut have been raised. Now, when they will come is still a question mark, with RBI, I believe, quite bent on bringing inflation numbers down to 4%. Yes, pre-budget in the industry, there was a basic thought process that probably by Q2 or probably early Q3 of next year, we would be seeing these lowering of rates. Yes, budget has given some hope that probably it could be earlier. But whenever it comes, yes, there will be an impact on the lending cost, but I believe there will be an impact on the borrowing cost also. So yes, it will be a challenge for housing finance companies and other lenders also. How do we manage both sides, the lending cost as well as the borrowing cost? But I think going forward, we would be prepared for that. This is something we are already trying to work on, trying to build on strategies, which we should be able to deploy well before or when these rate cuts are imminent. I think we should be well prepared for taking whatever the after effects of the lowering of rates will be there.
Right. Now, disbursements have been a concern as well, Mr. Adhikari. So how are you looking at the trend going ahead, if you could quantify that for us?
Yeah, from the disbursement perspective, let me be very candid and honest. It has been disappointing in terms of Y-on-Y growth. Yes, there has been a negative Y-on-Y. In Q1 and Q2, as I had said, yes, in the beginning of the fiscal, we had gone in for a major technological upgrade as well as a restructuring of the organization. That put us back to some extent. In this end, we had some issues with the technology, which got resolved somewhere about August. And then, of course, the restructuring effect, opening 44 new clusters. Clusters is the basic underwriting office of the company, if I may say. All proposals for taking a decision on whether to grant or not grant loans comes in from there. And then we had also opened 50 new area offices in Tier 3 and Tier 4 towns. So as far as the organizational restructuring in terms of our organizational structure is concerned, it is all in place now. The offices are up and running, brick and mortar. Deployment of people is over. Yes, it is taking some time for these people to settle in, as is usually the case. There have been large scale of movement of people from place A to place B. So that is well in place, and it is reflected in our Q on Q. If you see our disbursements Q on Q, they have grown. Yes, comparatively, when we compare ourselves Y on Y, there is a slight negative. Q4, I believe the uptake will be even more. We will see a better growth if I compare Q on Q3 with Q4. I'm very confident that the growth will be substantial in Q4. Maybe we will fall short Y on Y. That is what I'm estimating. But Q on Q, the growth will be significant.
Right, that was Hiral in a conversation with LIC. Remember, the earnings have looked spectacular for LIC. Their profits are more than doubled to 1,163 crores. Management highlighting what the road ahead looks like. The stock this morning trading flat, though. We'll take a quick break. We'll come back. We also have an exclusive on Bandhan Bank. So all that and more on the other side. So stay tuned.
All right, Paytm dominates news, and interestingly, CAIT has, which is the Confederation of All India Traders, has asked their members to stay away from or stop using Paytm, quote unquote. Interesting decision, and which is why we've gotten Praveen Khandelwal, Secretary General at the body, to come and talk to us. Mr. Khandelwal, good having you. Thanks for joining in. I'm trying to understand why this recommendation to do so. The Paytm fintech continues to work smoothly, has got people using it every single day for the last so many years without any glitches. Why this recommendation?
Then what was the need for RBI to intervene and impose the restrictions on Paytm?
It's on the payments bank. Yes.
That is one important question. The second question is the company which has been alleged to violate the rules and law for several times have sincerely given into the situation where we were forced to ask the traders across the country to discontinue with Paytm and go for some another options or UPI transactions.
Praveen ji,
banks.
Praveen ji, Tamanna here. हाँ, कैसे आप जब पेटीएम फिनटेक में कोई दिक्कत ही नहीं है, पेमेंट्स बैंक अलग बिजनेस है, उसमें जांच चल रही है, तो पेटीएम को बंद कराने से आपको नहीं लगता पैनिक होगा? जो आपने संदेश दिया है, पैनिक होगा?
देखिए, सबसे बड़ी बात तमन्ना जी ये है कि हमें ये समझना पड़ेगा कि रिजर्व बैंक ने क्यों इन पर रेस्ट्रिक्शंस लगाई, पहली बात। तो दूसरी बात, चाहे वो कोई भी कंपनी हो, यदि देश के नियम और कानून के साथ खिलवाड़ करेगी तो उसके साथ कोई ना कोई भविष्य में ऐसी कार्रवाई हो सकती है जिससे हमारे व्यापारी जो बड़ी संख्या में पेटीएम के यूजर्स हैं उनको नुकसान हो सकता है। तो उसको प्रीएम्प्ट करते हुए जिस दिन आरबीआई क्लियरेंस दे देगी पेटीएम को, हम लोगों को कहेंगे कि आप पेटीएम यूज कर लें।
ठीक है, नहीं, लेकिन okay, I get your point, Mr. Khandelwal, and thank you for speaking with us. But important distinction to make that what merchants, hundreds and thousands, and actually lakhs and crores of merchants in India use in terms of the Paytm service, there is no stress or threat to that, as per what the RBI has said. So I hope that message goes through, and then there is no unnecessary panic in a very core service. But we've run out of time, so thank you, Mr. Khandelwal, for speaking with us. Back to the markets now and what's happening there. UPL has reported a disappointing December quarter, as we've been saying. Varsha is joining us with a clutch of the house views. No question about the beating, but what is the broad consensus from brokerage reports, Varsha?
So, good morning, Tamanna. So, we are seeing a pressure on UPL price, stock price. Now, this is on the back of weak result posted by a company. If you see, pricing and destocking has hit earnings, and revenue decline is due to destocking of low channel demand in North America and Europe, and ongoing pricing pressure across key markets, including Brazil, where the demand is weak. Also, if you see, there were some con-call highlights which I want to highlight it. The first is certain markets like US and Brazil remain under pressure due to weak demand, declining prices and high inventory. Also, UPL is aiming $100 million operating cost savings in FY25 over FY23 base. Also, they continue to see challenging conditions in fourth quarter of FY24, and quarter 4 may see year-on-year volume decline, but sequentially to show quarter-on-quarter growth. Also, if you see, the management expects sequential margin improvement in quarter 4, and so there are also rating issues with this company. The weak results and high net debt of 31,000 crore raises concern on sustaining investment grading rating. Also, since UPL earnings have been crushed under industry-wide downturn, it is possible that rating agency may extend time for UPL. Also, as you rightly said, few brokerage have a view on UPL. So, Citi has a buy rating with the target price of 650, where they have reduced its target price. Then Nuvama has reduced rating for UPL, and Nimmelburn has rated accumulate with a target price of 568. Now, all the three brokerages have reduced their target price. Now, basis they expect near-term challenges in global agrochemical industry due to high inventory and declining agrochem prices. Also, like we spoke, they see risk of credit rating downgrades and pressure on balance sheet, and margin contraction, weakness in key markets, and inventory destocking for 2 to 3 quarters to put margin under pressure.
Right, thank you for that, Varsha. That is UPL. The street clearly not very pleased. Stock is down 6%, but on the upside, you've got Tata Motors that's stealing the show with a 7% gain on back of very solid earnings and brokerage upgrades coming in on the stock. With that, we're completely out of time, but thanks for watching. There's a lot more programming on the other side. Niraj, of course, will be talking to Manish Gunwani of Bandhan AMC about markets and more, so stay tuned.